What happened to millions of Americans' retirement money? AOC's question froze the congressional hearing room. Goldman Sterling CEO Marcus Thompson, sitting confidently at the witness table, didn't yet know that he was about to demonstrate why Wall Street's power and sophistication had enabled it to dominate American politics for over a century, even when facing the most aggressive congressional oversight. Tell us in the comments. Are you watching from your office during lunch break, at home after work, or maybe on your commute? We want to know where our viewers are tuning in from around the country as we dive into this incredible showdown between political passion and corporate power. The House Financial Services Committee hearing room buzzed with the familiar energy of high-stakes Washington theater. Committee members shuffled through briefing books while staff members arranged documents and adjusted microphones. Television cameras from major networks positioned themselves for optimal coverage of what had been billed as a routine oversight hearing on banking regulations. Marcus Thompson entered the hearing room that morning with the quiet confidence of someone who had navigated similar congressional interrogations dozens of times throughout his career. At 54, he had spent 3 decades climbing Wall Street's hierarchy, transforming Goldman Sterling from a mid-tier investment firm into one of America's most powerful financial institutions. His tailored navy suit and silver tie projected understated authority, the uniform of corporate power that commanded respect in both boardrooms and congressional chambers. Thompson's preparation for this hearing had been exhaustive, involving teams of lawyers, public relations specialists, and policy experts who had anticipated every possible line of questioning. His briefing books contained detailed responses to hundreds of potential questions, carefully crafted to provide information while revealing nothing that might damage Goldman Sterling's interests or legal position. Alexandria Ocasio-Cortez had spent weeks preparing for this moment with a different kind of intensity. Her staff had been investigating Goldman Sterling's business practices for months, following leads from whistleblowers within the financial industry who had contacted her office with concerns about retirement fund management. What they discovered was a complex web of investment strategies that generated enormous profits for Wall Street while exposing ordinary Americans' retirement savings to unprecedented risks. The investigation began when Maria Rodriguez, a retired teacher from Queens, contacted AOC's office about her pension fund's mysterious decline in value despite strong market performance. Rodriguez's case prompted AOC's team to examine broader patterns in retirement fund management, revealing sophisticated financial engineering that allowed investment firms to profit from pension funds while transferring risks to retirees. Working with financial analyst Dr. Jennifer Martinez, AOC's staff uncovered evidence suggesting that Goldman Sterling and other major investment firms had been using retirement funds as collateral for high-risk proprietary trading operations. The practices were technically legal but ethically questionable, generating billions in profits for Wall Street while exposing pension funds to potential catastrophic losses. Committee Chairwoman Maxine Waters called the hearing to order promptly at 10 a.m., her opening remarks emphasizing the importance of protecting American workers' retirement security. The stated purpose was to examine recent changes in pension fund management regulations, but committee members knew that the real focus would be on Goldman Sterling's business practices and their impact on ordinary Americans. Ranking member Patrick McHenry used his opening statement to defend the financial industry's role in managing retirement assets, arguing that professional investment management had generated better returns for retirees than traditional pension systems. His remarks set the stage for what promised to be a partisan divide on financial regulation issues. The early questioning followed predictable patterns, with Republican members asking friendly questions about Goldman Sterling's economic contributions and job creation. Thompson handled these softballs expertly, citing statistics about the firm's charitable giving, workforce diversity initiatives, and support for small business lending programs. Democratic committee members pressed harder on consumer protection issues and risk management practices. Representative Katie Porter asked detailed questions about fee structures and conflict of interest policies. Representative Rashida Tlaib inquired about executive compensation relative to firm performance. Thompson navigated these inquiries skillfully, providing specific information while avoiding admissions that might create legal or regulatory problems. Then came AOC's turn. She had been allocated 5 minutes for questioning, standard for committee members. Unlike her colleagues who had focused on general policy issues, AOC dispensed with pleasantries and dove immediately into specific allegations that Thompson hadn't anticipated. "Mr. Thompson, I want to discuss Goldman Sterling's management of public employee pension funds," AOC began, consulting documents spread before her. "Your firm currently manages approximately $847 billion in retirement assets for teachers, firefighters, police officers, and other public workers. Is that correct?" Thompson nodded confidently. "Yes, Congresswoman, we're honored to serve public employees who dedicate their careers to serving their communities. Our institutional asset management division has consistently delivered strong returns for pension fund beneficiaries." AOC leaned forward, her voice gaining intensity. "Mr. Thompson, are you aware that Goldman Sterling has been using these pension funds as collateral for proprietary trading operations that have no connection to retirement security?" The question was more specific and accusatory than Thompson had expected, but his years of experience showed as he maintained his composure. "Congresswoman, I'd need you to be more specific about what you're referring to. Our asset management operations follow all applicable regulations and fiduciary standards." AOC consulted her notes, clearly prepared for Thompson's deflection. "Let me be very specific, Mr. Thompson. Internal documents show that Goldman Sterling has been borrowing against pension fund assets to finance high-frequency trading algorithms, cryptocurrency speculation, and derivatives positions. Is that accurate?" Thompson's expression remained neutral, but experienced observers noticed a slight tightening around his eyes. "Congresswoman, asset management involves sophisticated financial strategies designed to optimize returns for beneficiaries. All of our investment decisions are made in accordance with fiduciary responsibilities and regulatory requirements." "Mr. Thompson, that's not what I asked," AOC pressed, her tone becoming more prosecutorial. "I asked whether you've been using teacher pension funds to finance cryptocurrency gambling. Yes or no?" The directness of the question was designed to force Thompson into a corner, but his response demonstrated the sophistication that had made him one of Wall Street's most effective executives. Rather than answering directly, he reframed the entire discussion. "Congresswoman, I think it's important to clarify some fundamental misunderstandings about modern asset management," Thompson said, his voice taking on an educational tone. "What you're describing as gambling is actually sophisticated risk management that allows us to generate higher returns for retirees while maintaining appropriate diversification." Thompson then launched into a technical explanation of derivatives usage, portfolio hedging strategies, and algorithmic trading systems that was both accurate and completely incomprehensible to most committee members and viewing audience. His strategy was brilliant. By drowning AOC's accusations in technical jargon, he made her appear uninformed while positioning himself as the expert. Furthermore, Thompson continued, suggesting that professional investment management is equivalent to gambling demonstrates a fundamental misunderstanding of how capital markets function. The sophisticated strategies employed by Goldman Sterling have generated an average annual return of 8.7% for pension fund beneficiaries over the past decade, significantly outperforming traditional investment approaches. AOC realized she was being outmaneuvered by Thompson's technical explanations, but she pressed forward with her prepared line of questioning. "Mr. Thompson, I have here documents showing that Goldman Sterling lost $2.3 billion in pension fund assets during a single cryptocurrency trade last month. How do you explain that to the teachers whose retirement money you lost?" Thompson's response was a masterclass in corporate crisis management. Rather than denying the loss, he contextualized it within broader market realities while shifting responsibility away from Goldman Sterling. "Congresswoman, I appreciate your concern for public employees, which Goldman Sterling shares. However, it's important to understand that short-term market volatility is an inherent feature of any investment strategy designed to generate long-term growth. The specific transaction you're referencing was part of a diversified portfolio strategy that has generated net positive returns for beneficiaries." He continued, "Moreover, suggesting that Goldman Sterling lost pension fund money mischaracterizes how institutional investment management works. Pension funds accept market risk in exchange for the opportunity to generate returns that exceed inflation and support retiree income needs. The alternative, Keeping retirement funds in low-yield government bonds would virtually guarantee that teachers and firefighters couldn't afford to retire. Thompson's argument was sophisticated and difficult to refute without extensive economic expertise. He had successfully reframed AOC's attack as a misguided assault on the entire concept of professional investment management, positioning himself as the defender of retirees' long-term interests. AOC tried a different approach, focusing on the ethical implications of using pension funds for high-risk trading. Mr. Thompson, do you think teachers who contribute to their pension funds understand that their money is being used to speculate on cryptocurrency prices? Thompson's response demonstrated why Wall Street had maintained political influence despite recurring scandals and public criticism. Congresswomen, pension fund trustees, who are often former teachers, firefighters, and public employees themselves, hire professional investment managers precisely because modern capital markets require sophisticated expertise. Suggesting that we should limit investment strategies to what individual contributors might understand would be a disservice to their retirement security. The argument was both condescending and logically powerful. Thompson was essentially arguing that ordinary Americans were too unsophisticated to understand their own financial interests, while positioning Goldman as the necessary expert intermediary protecting their futures. AOC's frustration was becoming visible as Thompson systematically deflected her attacks while maintaining his position as the reasonable expert defending retiree interests. She decided to focus on the specific financial losses that had prompted her investigation. Mr. Thompson, regardless of your explanations, the fact remains that Goldman-Sterling's high-risk strategies cost pension funds billions of dollars. How do you justify enriching yourself while losing teachers' retirement money? Thompson's response was his most effective of the entire hearing. Rather than becoming defensive, he used AOC's attack to demonstrate his superior knowledge of financial markets while positioning her as an ideological extremist. Congresswoman, I understand that criticism of financial institutions is politically popular, but policymaking requires understanding rather than rhetoric. Goldman-Sterling's compensation is tied directly to the long-term performance of assets under management. When pension funds perform well, we share in that success. When markets decline, we absorb those losses alongside our clients. He then produced his own set of documents, turning the tables on AOC's investigative approach. In fact, I have here performance data showing that pension funds managed by Goldman Sterling have outperformed their benchmarks by an average of 1.7% annually over the past 5 years. That outperformance has generated approximately $47 billion in additional retirement benefits for public employees. Thompson's use of data was strategically brilliant. By focusing on long-term performance rather than short-term losses, he made AOC's specific criticism appear cherry-picked and misleading. Committee members who had been following AOC's line of questioning began to look confused about who was actually serving retirees' interests. The CEO continued his counterattack by questioning AOC's expertise and motivations. Congresswoman, I respect your advocacy for working families, but complex financial management requires technical expertise that can't be reduced to social media soundbites. The suggestions implicit in your questions, that pension funds should avoid sophisticated investment strategies, would condemn public employees to poverty in retirement. AOC attempted to regain control by focusing on transparency and accountability. Mr. Thompson, my question is simple. Shouldn't teachers know that their pension money is being used for cryptocurrency speculation? Thompson's final response of the exchange demonstrated the full power of corporate sophistication against political pressure. Congresswoman, your characterization of modern portfolio management as a speculation reveals exactly why pension fund trustees hire professional managers rather than making investment decisions through congressional hearings. Goldman Sterling's fiduciary responsibility is to generate optimal risk-adjusted returns for beneficiaries, not to provide investment education to individual contributors. The exchange continued for AOC's remaining time, but Thompson had successfully neutralized her attack while positioning himself as the defender of retiree interests against political interference. His combination of technical expertise, moral authority, and strategic deflection had turned AOC's accusations into apparent evidence of her own inexperience with financial markets. When committee chairwoman Waters announced that AOC's time had expired, Thompson had not only survived her assault, but had emerged appearing more credible and trustworthy than his congressional interrogator. The subsequent questioning from other committee members felt anticlimactic, with Thompson maintaining his position as the reasonable expert defending retirement security against political grandstanding. Republican committee members seized on Thompson's performance to criticize Democratic members for pursuing what they characterized as politically motivated attacks on successful American businesses. Representative Andy Barr praised Goldman Sterling's contribution to retirement security and criticized regulatory uncertainty created by politically driven investigations. Democratic members attempted to build on AOC's line of questioning, but Thompson's earlier performance had established him as the authority figure in the room. His responses to follow-up questions continued to demonstrate superior knowledge while positioning congressional oversight as potential interference with retiree interests. The hearing concluded with Thompson delivering a brief closing statement that summarized his defense while appealing directly to public employees watching the proceedings. Goldman Sterling remains committed to serving the retirement security needs of America's teachers, firefighters, police officers, and other public servants. Our track record speaks for itself, and we welcome continued oversight that's based on facts rather than political theater. Media coverage of the hearing reflected Thompson's successful defense against AOC's attacks. Financial news outlets praised his performance while criticizing congressional members for lacking sufficient expertise to conduct meaningful oversight of complex investment strategies. Even mainstream media coverage focused more on the technical complexity of modern finance than on the specific allegations AOC had raised. Wall Street's reaction was overwhelmingly positive, with Goldman Sterling's stock price rising 3.2% in the days following the hearing as investors gained confidence that regulatory pressure would not significantly impact the firm's business model. Other financial services companies saw similar gains as markets interpreted the hearing as evidence that congressional oversight posed minimal threat to industry practices. Pension fund trustees and institutional investors largely supported Thompson's performance, viewing his defense of professional investment management as protection for their own roles and responsibilities. Several pension fund officials issued statements praising Goldman Sterling's long-term performance while criticizing political interference in investment decisions. AOC's supporters attempted to frame the hearing as exposing corporate power's influence over democratic institutions, but their arguments struggled against Thompson's demonstration of superior expertise and his appeals to retiree interests. The technical complexity of modern finance made it difficult for critics to explain why sophisticated investment strategies were harmful without appearing to oppose retirement security itself. The long-term impact of the hearing reinforced Wall Street's political influence while demonstrating the limitations of congressional oversight in addressing corporate power. Thompson's performance showed how technical expertise, strategic communication, and moral positioning could neutralize even aggressive political pressure from high-profile critics. For Thompson personally, the hearing enhanced his reputation as one of Wall Street's most effective executives and defenders of the financial industry's social value. His ability to withstand AOC's attack while maintaining his credibility positioned him as a leader capable of protecting corporate interests against political pressure. For AOC, the hearing represented a rare political setback in her congressional career. Her inability to effectively challenge Thompson's expertise or moral authority suggested the limitations of political pressure against sophisticated corporate power. The experience demonstrated that passion and good intentions were insufficient against opponents who combined superior resources with strategic brilliance. The broader implications extended far beyond individual political careers. Thompson's successful defense of Goldman Sterling's practices illustrated how corporate power had evolved to neutralize democratic oversight through superior expertise, strategic communication, and moral positioning rather than crude political influence. Most significantly, the hearing demonstrated that Wall Street's power derived not just from financial resources, but from its ability to position itself as the indispensable protector of ordinary Americans' economic interests. By framing sophisticated financial practices as necessary for retirement security, Thompson had made opposition to corporate power appear as opposition to working families' welfare. The lesson was sobering for critics of corporate influence. Modern corporate power had evolved sophisticated defenses that made traditional political pressure increasingly ineffective. Thompson's victory over AOC represented not just one executive's skillful performance, but the triumph of institutional sophistication over political passion. In the end, the hearing reinforced the very power structures it had been designed to challenge, demonstrating why Wall Street had maintained its influence over American politics despite decades of criticism and scandal. Corporate power had proven its ability to adapt, evolve, and ultimately prevail over democratic pressure. Click subscribe to see more confrontations between political power and corporate sophistication in the halls of Washington. Thank you for watching, and we'll see you in our next video. God bless you, and God bless America.